Now, the Ministry of Commerce and Industry unveiled India's foreign trade figures. Given the prevailing uncertainties in the global economic scenario, let's delve into India's performance in January. Merchandise exports for the month of January amounted to $36.92 billion, marking a 3% rise compared to the same period last year. Now, this growth was driven by 18 out of 30 key factors such as iron ore, electronic goods and spices, all showing positive momentum in the month of January. Conversely, imports increased by 2.9% to $54.41 billion from $52.83 billion in the month of January 2023. Consequently, the trade deficit widened to $17.49 billion in the month of January compared to December 2023. Although it has expanded annually, sequentially it has narrowed to a 9-month low. Now, talking about the services sector, exports surged by 17% to $32.8 billion compared to $28 billion in the corresponding period last year, indicating resilience in the face of significant global challenges. Services imports also experienced an 8% rise to $16.05 billion. While the merchandise trade deficit expanded, the services sector maintained a trade surplus of $16.75 billion. Now, India's overall exports, combining both merchandise as well as services, in January 2024 are projected to reach $69.72 billion, reflecting a favorable increase of 9.2% compared to January 2023. Similarly, total imports in the month of January 2024 are anticipated to amount to $70.46 billion, showing a positive growth of 4.15% over January 2023. Now, as we delve into the trade balance for the fiscal year of 2024 until now, the January data offers a glimpse. From April 2023 to January 2024, there was a decline of 4.8% in the merchandise exports, accompanied by 6.7% decline in imports. Conversely, services experienced some positive shifts, with service exports rising by 6.3% during the period, while imports declined by 1.6%. Now, the significant highlights is the notable improvement in India's trade deficit during the April to January period. The overall trade deficit saw a remarkable improvement of 37.11%, dropping from $101.99 billion in the April to Jan period of the last fiscal, which is of FY23, to $17.43 billion in the April to Jan period of this fiscal, which is FY24. Now, in summary, India's export performance has been restrained due to subdued external demand stemming from global challenges and a slowdown in its major markets. Additionally, the recent tensions in West Asia, particularly the threat posed to shipments passing through the Red Sea, have compounded these challenges. Now, it's worth noting that approximately 30% of Indian exports pass through the Red Sea. Now, despite these uncertainties, India's merchandise trade deficit reached a 9-month low in the month of January. Commerce Secretary Sunil Berthwal highlighted that despite the challenges posed by the Red Sea crisis, economic downturns in advanced economies, and declining commodity prices, achieving positive merchandise growth in January is quite noteworthy. In response to these challenges, banks have been directed to extend credit to exporters, and both the Exim Bank and the ECGC, which is the Export Credit Guarantee Corporation of India, has been instructed not to raise the insurance rates. On the services front, although software exports continue to dominate India's services exports, there has been a notable rise in the prominence of GCCs, which is the Global Capability Centers, lately. Now, these centers have experienced significant growth, comprising 26.4% of the total service exports in the first half of the April to September period for this fiscal year, up from 19% in the 2013-2014 fiscal. Now, overall, the January trade data reflects a positive sentiment amidst geopolitical tensions. The increase in exports, despite the logistical challenges posed by the Red Sea situation, underscores the resilience of the sector and the export community, which has demonstrated its ability to overcome similar obstacles since the Russia-Ukraine conflict. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.